Welcome back to the Gold and Alternative Investment Show. My name is Kerry Stevenson, and we're here to help educate you through this challenging and volatile time in both the markets and possibly even in your personal space. But my thing is to bring on interesting speakers, and today I'm delighted that I've got the Executive Chairman of Martin Place Securities. His name is Barry Dawes. He's spent over 30 years in the markets. He's worked for BT Funds Management. He's also worked for Macquarie Bank. I've known him for a long time. He has a newsletter called Dawes Points, which at the end of this interview, we'll make sure that you've got all the links to that because it's full of great information. Today, we're going to be focusing on gold. What next for gold? Where to next? And there's no better person to help you guys navigate what's going on. Barry, welcome to the program.
Thank you, Kerry. Thank you. Pleased to be here. Honoured to be on your panel of interviewees.
Ah, well, that's very kind of you as well. Okay, so let's crack it straight on. I'm actually going to step back now because I know you've got a lot of things to share. So why don't you do your thing and talk to my community about the fundamentals, what you see for gold, and more importantly, I think you're going to cover gold equities as well. Is that correct?
Yes, yes.
Fantastic. Over to you, sir.
Well, thank you. Well, first and foremost, gold is in a brilliant bull market. And it's going to go on for a long time. And it's going to go to levels that will surprise you, I think. And this bull market's not going to fall over in a year or two or three or four. It's going to go on for quite some time. And that gives us quite a lot of time to get quite a big gold price in the future. Now, why would we get that? Well, there are any number of reasons for it. People have got their views on gold, but my view on gold is it's the metal of prosperity, not the metal of crisis. So that's my view, and I'm sticking to it. So we've got all these things going around the world, enough to make you want to slash your wrists, whether it's COVID-19 or the riots in the going on around the world. There are a lot of difficult things out there. However, the stock markets are still hanging in there, which is important for my way of looking at the world. And the other thing is that we do have this growing global prosperity. China is still growing. It might not be growing at the rapid rates that it was previously, but it is growing, and we're seeing rising middle classes, and as they rise, they want better food, they want motor vehicles, washing machines, and other things, and they also want to have some gold because it's a status symbol and it's a store of value for them. Now, those sorts of people know a lot about debasement of currency, so there's an added part that they think gold is important for the long term. Now, they've got 1,400 million people, and very close behind is India with almost 1,400 million people. I think we'll find that India will pass China in the next couple of years. It's really quite quick that change of the baton will take place. The one-child policy will slow down the birth growth rate in China, and India will just cruise past. But all the gold going into China and India has just been quite extraordinary, and most of it's come from the West. So the inventory in the West has been run down while these people have increased their living standards and so on. And even last year we had a record level of gold jewelry demand in the United States. So their prosperity has been rising as their stock market's been rising over the last few years. So that's all very, very positive for gold. And people who have sold the gold to India and China and now have to buy it back from somewhere. And that's going to be an underpinning driver of the gold price going forward, as I see it. You've got issues with central banks and bond markets and debt and all that sort of stuff. That's all there. That's there. But the underlying feature is that global demand and prosperity is pushing gold higher. And because we've got short covering, we're going to see a much higher gold price. That's my view. So if we have a look at some of the share price, the price charts for gold, we get some pretty interesting things. So if I can do this right.
The joys of technology. as Barry goes to share his screen. We love Zoom.
I'm not doing very well. Just
So I think Barry's right. While he's doing that, it is quite interesting. Right now, the gold price, as we're speaking today, is around 2,500 Australian dollars, which is about 1730 US dollars. And I always find it fascinating that on the Australian media, they only ever talk about the gold price in, there comes his screen. They only ever talk about the gold price in US dollars, but Barry will talk about currencies as well. So here we go. I can see your screen, Barry.
Yes, so the gold price has been consolidating now for almost 3 months above 1,700. It's a futures price, so it's not quite the same spot, but it's been going sideways after a nice move up from the beginning of the year. Now, if we go back to some of these previous consolidation periods, we've had a good rise, consolidation, then a move up. So I've got consolidation here, then a move up. We've got one down here. We've got a pullback and then a move up. So all these things are basically suggesting to me that we're about to see in the next few weeks another move higher in gold. And that will take us up to at least 1,800, and later in the year will take us through 1923, which was the previous high. Now, this is in US dollars. We've got to also keep in mind that almost every other currency is seeing new highs in gold over the last few months. Individual currencies have got a lot of volatility, and consequently the gold price might be up or down, as we've seen the $8 getting up to 70 cents after being down sub 60. So the $8 gold price has been a bit softer, but the long-term trend is still very much higher in all currencies. When we take a longer term, just excuse me a moment.
Yeah, I guess that's quite important as well. Taking a look at the longer term charts, and it's very interesting. While Barry gets to his next slide, it's pretty interesting that people don't really realize that it's the different currencies where the gold price is hitting all-time highs, yet it still hasn't hit its all-time high in US dollars, which suggests to me that it still has room to move. But at the same time, I don't think that people should necessarily just look at gold per se as something that to look at in dollars. I think what they should be doing is saying that this is a way for me to protect my wealth when there's all this money printing going on. Back to you, Barry.
Absolutely. So just looking at what we saw through 2019 and this year, and then putting this in a slightly longer term framework, what we see is the gold price up here above 1,700. There's a lot of previous market activity around 1,800. So this is going to be resistance for a little while. And I think that once we break through this, we'll get through that 1923 that I was talking about. And I see that happening later in the year. Now, when we look at the longer term, this does look really quite fascinating. With the low in gold, whether we talk about it being in 1999 or in 2000 or 2001, depending where you were in New York or London, but that when this part of the bull market made its starting lows, we saw quite a strong move up there to March 2008. Pre-GFC, pulled back on the GFC and made a new high, and you can see we've consolidated back through here, and we're moving up. That next time frame gives you some idea of where gold might be going, and it's not silly talking about this distance between $246 at the low and 1923. If we put that, it's way up there somewhere. So we are going to see a big gold price. Now, stepping back even further, and I'm sorry, it's a bit. So this is from my good friend Jason Atkinson from Chisholm on Twitter, and he's given us a 100-year history of the gold price. And It's got some very nice channels, and I think we're going to see up around the 2,500 in the next year or so, and then certainly through 3,000, not very far away. So we're in a big bull market for gold. It's a long-term bull market. It's got a long way to go, and you shouldn't worry about it coming back very much. If it does, it's just a buy. But the technicals, as far as I can see, together with what I understand of the supply and demand, means it's going higher. So all that's very, very good. So you come back and say, well, how can I play gold? I can go and buy gold, and that's good. You can have it in the Perth Mint or other players, or you can buy some, put it in a safety deposit box, or hide it under the bed, or wherever you want to do, to have some gold as gold coins or as bars or whatever. So that's good. But I like to think that people can play gold better through the gold stocks. And what we're seeing in Australia is a real renaissance in gold mine production. Over the last 10 years or so, we've seen a really strong rise in gold production. And I'm looking at gold production being well over 350 tonnes in the next couple of years. Now, what is really interesting, and I'd like everyone to just keep in mind a bit of history. Our gold production peaked in 1997 at about 312 tonnes and 318 annualized for the quarter. But then it declined. Now, as you'll see as I go further through these slides, the Australian Gold Index, which didn't exist in 2000, it didn't exist in 2003, but ASX decided to give us a gold index again about 2004 and backdated it to 2000. But it went from 1,000 at the beginning of 2000, and it got up to 7,500 pre-GFC in 2008, and then got up to 8,500 in 2011, while the gold production in Australia was declining. And in Western Australia, it fell 48% from the highs to the lows in 2008. So what that basically says is that the Australian gold industry did not participate in the bull run in 2008, 2011. It did not participate, yet the gold index was very, very strong. And that was because the Australian gold gold industry exported its technology and its entrepreneurship to Africa and South America and Asia and other parts of the world. But this time we've got a real gold bull market in Australia. We've got Australian gold production rising, and what that means is the earnings that Australian gold companies have got are very strong. They're growing. Their costs are rising at the margin for a number of reasons, but generally, as the gold price goes high, you can treat lower grade material. So there's an implied increase in your cash operating costs as you see a slightly lower operating grade. But the numbers are showing good growth right across the country. Now, Western Australia does about 65% of our gold production, but we've got a few stars coming through with New South Wales and, more importantly, Victoria. But New South Wales has Newcrest Cadia project or operations, which were producing almost 1 million ounces annualized in the December quarter last year. So that made them pretty significant in the gold production. And in Victoria, with Kirkland Lake and Fosterville, we're finding that that's coming along very nicely. So as we move forward, we think of the companies, the Northern Stars and the Evolutions, the Newcrests, Regis, Saracen, Ramelius, Silver Lake. These things have moved along very, very nicely indeed. And they are a reflection of the growing production in Australia. Now, The gold production comes from exploration, and if you spend money, you find gold, and it's very important to see this very strong growth in gold exploration over the past few years, and we reached a record level in nominal terms of $1.2 billion annualized. Now, the average cost of finding gold over the last few years has been about $50 an ounce. There are some people who are doing that at much, much less, which is wonderful, and other people are spending money without much success to give us that.
Barry, can I just interrupt you for one moment there and just say, to those that don't understand, that will be listening to this, because there'll be people out there that, you know, aren't understanding when you say cost of production, why do they care, and how does that impact opportunity?
The cost, the finding cost?
Yep.
All of the finding cost. Well, it's just that if we spend $1.2 billion and it's cost $50 an ounce, that basically means we'll find about 24 million ounces of new resources. So that's pretty interesting. So we produce 350 tons, which is about 11 million ounces a year. So we're actually finding more resources than we are mining. Even if we get a conversion ratio of 24 million ounces and we can only mine half of that, we're still adding to our total reserve inventory, and that's really good for Australia, and it's good for the currency, and it's good for the industry. So if you're exploring and you're spending money, you'll find gold. And if you find gold, you can mine it, and we'll see growing production. There's so much exploration activity going on in Australia at the moment, and we're seeing some really good discoveries announced. Now, one of the most important of all those has been Fosterville in Victoria, and I'll get to that in a moment. But it's being shown up. Well, it's not really been shown up in the gold index at the moment because there's only been 20 stocks in the gold index. At the peak in 2011, we had 52 stocks in the gold index. So the gold index is really pushed by Newcrest, which makes up nearly 40% of it at Northern Star and Evolution. So there's not much room there for small companies or smaller companies. There'll be a rebalancing that's been already announced. So as we go into the September quarter, we'll find that there'll probably be about 25 gold companies, and we might see a bit more action in this index. Now,
what does this index show? What is this slide showing us right now? I mean, we can see the blue lines, it's going up. Explain what it's actually showing.
Well, this is an index of all the stocks in the ASX All Ordinaries Index that are gold stocks. Now, this hasn't come out well at all, but it started at 1,000 down here in 2000. So this gives you some idea where the gold index went. This is the GFC and the rally after it, the pullback, and this is our new bull market. So we're sort of in sort of 6 years into this bull market, and what we've done is that the index has come up to the level where we were in 2011 after the GFC. So we're at the highs. If we look at the way this triangle is formed, it looks to me as if we've just got a bit more work in here before we break higher. But what this is also saying to me is this is a huge base, and we can see an inverted head and shoulders pattern here, which will be moved. And in technical terms, this distance from this neckline to the head, and this is logarithmic, this is going to be well off the page. And so when this breaks out, we're going to find that these gold companies will be very strong performers. Now, it's really important for investors and maybe even new investors to make sure you've got a portfolio that has the big stocks. Now, these big stocks are still very much underweight by global investors, and most of the big stocks are owned by global investment fund managers, and not many Australian companies, funds are in the top 10 of the major companies. It's really quite surprising. But the big North American funds have big holdings in the Newcrests, the Northern Stars, the Evolutions and Saracens and so on. So they're very, very attractive to overseas investors. The gold companies today have got very, very little debt. And that's because they've been able to have very strong cash flows. Northern Star and Saracen and Evolution have still got debt there, which from recent acquisitions, but those companies have got very conservative balance sheets, so they're going to be fine. And most other things outside the gold index, there's no debt whatever. So the cash flows will go to acquisitions of other companies or project expansion, but most importantly, coming through as dividends. And the dividends we're going to get from Australian companies will be far higher than North American companies, in my view. North American.
There haven't been, historically, there haven't been big dividend players, have they? Do you think that's changing due to the changing prices?
Depending how far you go back, and gold stocks, particularly the South African gold stocks, were really yield plays, and that was very, very important. And most mining companies, once they get their project up and running, they're talking really about paying 60 to 65% of their earnings as dividends. And mining operations, because they've got such a large capital component in their P&L account in terms of depreciation and amortization, they tend to be very strong cash flow generators, and so they can maintain these high payout ratios. And I think they're only going to get bigger, because they won't be able to spend all the money, because the gold price, in my view, will be stronger. So this gold index is just biding its time. It'll go sideways for a few more months, but then I think that we'll make a new high. And as we go through about 8,500, we will just be off and running. Now, this high in 2019 took out the 8,499 high that we saw in 2011. So that to me is a very, very powerful pattern for people to look forward to. When we go forward, there's some really important things that are happening in Australia on the exploration scene. The most significant of it has really been Kirkland Lake with its Fosterville operations and the Swan zone that was discovered. Kirkland Lake in the December quarter of last year produced 199,000 ounces at 49 grams.
Oh my goodness. And for those people out there that don't understand, means the higher the grams per ton, the less dirt they have to move, the more profit they can make, in simple terms.
In very simple terms. And they have operating costs of about $200 US. And so that will do over 600,000 ounces this year. And you're talking about them making probably $1 billion US pre-tax cash flow. So it's a very, very significant deposit, very significant mine, and wonderful output. But what's happening in Victoria is that the goldfields in central Victoria of Bendigo, Castlemaine, and Ballarat to the south here, these were the biggest goldfields in the world. And people of Bendigo and Ballarat and hence Melbourne, were very, very wealthy as a result of the gold. So we we saw 22 million ounces being produced out of Bendigo, and about 18 out of Ballarat. Castlemaine, 5.6 million ounces historic production. For Castlemaine and Ballarat, a lot of that was alluvial, but Bendigo was reef. Now, the gold industry in Victoria essentially died in about 1920, and there was next to no production. But what we've got now is a new group of companies that are looking under the Murray Basin sediments. Now, this is the extent of the Murray Basin. To the south, you've got not very much in terms of overburden, but you've got just thousands and thousands of small workings throughout this Bendigo zone in Bendigo. But up here, we've probably got just as much gold, but under 15 to 20 metres of cover of the Murray Basin. So we've got companies like Catalyst and Chalice looking at these things. They've got very, very large areas to explore, and I think we're going to see some very great results coming out of here over the next few years. And this I think will lead to quite large gold discoveries and help to increase our overall gold production to push us well above that 350 tonnes going forward. So this part of Victoria, with some of these companies, like here we've got Kalamazoo, Chalice, Catalyst, Kirkland Lake, Newmont, and there are a couple of other little companies coming through. So there's going to be a lot of action, a lot of activity.
And I think it's important to note here as well that Kalamazoo, I think it was the back half of last year, had Eric Sprott and Novo Resources become cornerstone investors. And Eric Sprott is a long-time investor in very successful gold projects. So he's certainly been very involved in Kirkland Lake and getting that up and running. So it's a real revival for the Victorian goldfields, isn't it, Barry?
Oh, it certainly is, and I'm really quite excited about what's happening there. It's going to take a few more years to come to fruition, but the prize is very large, and the new technologies that we have today compared to what was available even 10 years ago will make exploration a lot easier and more successful with lower risk.
Yeah.
So that's a really exciting part of Australia at the moment. The other thing which is really very, very important for people to understand is what we have with De Grey mining. Now, this Malina gold project has got 2.2 million ounces spread over these 5 deposits. And some of these, well, all these are open at depth and along strike, and they've got good potential. But this Hemi discovery, which has come through just in the past 6 months, has got the potential of being bigger than all of them combined. And so this is really opening up a new part of Australia in terms of the activity in the Pilbara. Now,
yeah, I was just about to say, for those of you that are watching, this is over in Western Australia, yes, in the Pilbara area. And the Pilbara hasn't been an area which has been predominantly, people have been out exploring in the Pilbara, but nobody really believed there were going to be big discoveries. And then De Grey Mining, which was quite a small, very much a small cap company, it was only once they made this discovery of Hemi that they started getting a lot of attention. Would that be correct, Barry?
Yes, it's really important to recognise that the Yilgarn, which is the cratonic area where most of Western Australia's gold comes from, is to the south, and the Pilbara is older rocks, but it has been better known for its iron ore and manganese, and also the Pilbara has made added an enormous amount of wealth to Australia from the offshore oil and gas, because that's where the many of the projects come on shore. So the Pilbara has been growing very well, but there's not a lot of water in the Pilbara. The Pilbara is a most inhospitable place if you've ever been there in summer, and it's tough. They have a lot of cyclones through there, and consequently the landform is pretty tough. It's pretty tough country. So it's been very difficult for explorers and prospectors to get out there. There are very few rivers, there are very few creeks, and consequently there's no way where you can go along and pan for gold as you would normally. Having said all that, we saw just a few years ago this great rush for the Pilbara watermelon seed conglomerates, and that sort of put the Pilbara on the map in terms of gold. Now, I'm a true believer in those watermelon seeds in the Pilbara, and the extent of them, and the total amount of gold that will be in this vast area. But that's going to be Novo Resources and its Egina project, which is just quite spectacular. That will add significantly to Australian gold production over the next several years. But when we look at Hemi and what it represents, we've got 185 kilometres of tenements for De Grey here, and there's 155 kilometres of strike of this Taba shear zone, which becomes the Withnell and the Melina and whatever else, and has all these splays. So,
and that just means, again, for people that are watching that aren't geologists, all that means is that the gold is not just in that little area where you see Hemi. What Barry's saying is the gold stretches out from there, and when you say a long strike, it's along these shear zones. So there's a lot more to find. Would that be the best?
Yes, that's my view. And the really interesting thing is, if people can conceive that there are these fluids from the mantle, which are gold bearing, they will come to surface through these fracture zones, and they will be deposited in different rock types. So as the fluids come through and are deposited in the rock types, we get different styles of deposit. Hemi is very, very different to Tawarana, which is very, very different to.
We've gone from the Victorian goldfields over to Western Australia. There's a lot of activity going on. Barry, what should, because we're just starting to run out of time, what should, it sounds to me like investors really need to take a look at gold equities, and not just, because a lot of people look at, they see gold and they're like, oh, I just need to buy physical gold. But you're saying the upside, if you do your proper work and understand it, is in gold equities.
Look, I think so, yes. We've seen this particular company in December was 6 cents, and last week it was 67. So
10 times your money.
10 times their money in 6 months. And the risk in this particular company is relatively low. And in my view, this stock will probably increase in capitalization by 40 to 50% per annum for the next 5 years. So there's a lot of upside in this particular company. And what we're seeing too is a lot of other companies are around here, and with neurology.
Yeah, Kairos, I know Kairos Minerals are very close by, and they've got some exciting announcements coming out. But look, ladies and gentlemen, the other thing is you've got to do your own research. But Barry does research, don't you, Barry? Can you explain to people that are watching what you do to help people understand this a little bit more? And if they want to be a part of what you do and perhaps get your expertise, because there are a lot of investors out there that will make mistakes because they're not geologists by background and they don't understand it, but you can help them through that process.
Yes, I think if you start with what the gold price is doing and look at those graphics and what the longer term suggests to me, and then see that gold production is rising, and see which companies are producing, which companies are going to be producers, which companies are exploring in the right areas, the right people, if they've got enough funding available. And it becomes, and if you have a portfolio approach and with a lot of your funds in the big stocks, because that's where you're going to make a lot of money and get dividends, and then you can have a distribution of the smaller stocks in your portfolio, but you might have only 5% of your portfolio in something like a degree, but if it makes you 10 times your money, it was risky when it's 6 cents. It's not so risky when it's 60 cents. So, and you can go and look at many stocks. So be disciplined, have a portfolio. Don't think in terms of being a trader, think of being an investor. It's like building a house. When you start, you've got a block of land, you build things, and eventually when you finish, there's value in the house, and you've added value during the construction period. So we go about it systematically, look at the companies, the people, the funding, the geological opportunities, and to sort of see where we go. So you can talk to me, number, Martin Place Securities, my email address. I'm on Twitter @Dawes Points, and I have my newsletter, which is called Dawes Points.
So how can they sign up for Dawes Points? Because that's full of fantastic information.
Well, if you
send you an email, or
if you just go onto the website mpsecurities.com.au, and you can register there to be part of the Dawes Points distribution. I write things about once a month. It's free of charge at the moment, but we've been calling the markets pretty well in terms of where we sit globally, and it's something to help you make investments and understand what's happening in the markets.
And also, I think for people that are watching, one of the reasons I was very keen to have Barry on the program today was because Barry's background is not just on the financial side, and he's raised money for over 30 IPOs. I think a lot of money for companies that have subsequently become very successful, but he also understands the geology. He has a geology background as well as the finance background. Marry those two together, and very few, I guess, bad ideas are going to get past him, because Barry can basically ascertain whether or not they've got something that is worth pursuing. And it is, as Barry said earlier, the larger companies that are already mining, that are already in production and have cash flow, are way less risky. But as I always say, you must do your own research, or at least make sure that you've got somebody like Barry on your team, because quite frankly, none of you will know, especially those people that don't have a geological background. You don't know what you're looking at. So you need to have a team member like Barry Dawes on your side who can direct you to, and by the way, they're not all going to become winners, but that's the game. And also in mining, it takes, as Barry talked about it before, it's like building a house. But with mining, it can take a lot longer, because you're exploring, you're developing, and then you're producing. And they're not all going to become producing mines. Barry, I'm going to send it over to you for final words.
Well, thanks for the opportunity, Kerry. Yes, it is a very exciting time in the Australian gold industry. It's good for the producers, it's good for the developers, it's good for the explorers, and they're really great investment opportunities where you can assist these companies in their growth. All these companies will need capital one way or another, and they do that through IPOs, they do that through rights issues and placements and whatever. So they need to raise funds to invest, and once they've invested in operating assets, they're generating cash, they can pay dividends to shareholders, they can invest in exploration, they can do mergers and acquisition, and I think we're going to see quite a lot of merging and acquisition activity within the sort of smaller companies. But it's an exciting sector to be in, and in my view, even though we've been running for 6 years from the lows, once we break through those previous highs, we've got another, in my view, 10 to 15 years of gold market to enjoy.
Barry Dawes, has been an absolute pleasure speaking with us today. Now, for those of you that are watching, as Barry just had up on the screen, that's his contact details. Scroll back if you didn't see them. If you still don't know, you can always send me a direct message. But if you like this and if you think it's valuable to someone, make sure you hit the subscribe button and share this with other people so that they know that there are people like Barry Dawes out there that can help them navigate through what we believe is going to be a really good run in the gold industry going forward over the next decade or so. So
Yeah.
once again, Barry, thanks very much for joining me today.
Thanks so much, Kerry. Thank you. Pleasure to be here.